capsule of the day's action and a clue to where traders were interested in taking prices during the main trading session, just by looking at the body of the candle and the direction it is headed. Now, there are individual candles that can be very significant. We'll talk about some of those when we get to the charts. We have the dojis, the engulfing patterns. We have the hanging man. We have haramis. We have shooting stars. A lot of different names that we're going to apply. I don't intend or pretend to be an expert on all the various candles. Sometimes you look at them and you kind of know what it is when you see it. Maybe I won't apply the exact right name, but we'll work with those candles as we get to those. We talk about the charts, in the current situation. Now, will candles be the key to trading success? Well, it won't. I mean, you aren't going to do the holy grail. You're not going to have perfect answers. That's wishful thinking. Sometimes you may have some indecisive action that's reflected on the candles. Sometimes several of them will come together to form a type of pattern. And you try to get your clues out of it, but you still have to study the charts. You still have to make your decisions. So to help in that cause, what we need to do is we need to find some kind of indicators that will help us do that. And when we're looking for technical indicators, what do we need to know? What do we need to know that will help us the most in making a trade? And that's why we want to get the most out of our charts. We're paying for them. We need to glean as much information as we can out of them. Now, for many traders, not enough just to look at charts visually to come up with a trading decision, but you still need to know the fundamentals. You still need to know about the chart patterns that we talked about. But many traders rely on some type of various technical indicators to give them more clues. It's kind of like that gumshoe detective that's looking at the ground, trying to analyze what is going on, see what the price tracks are telling him, and see if there isn't some special insight to be gained that will lead to more profitable trade. Now, what are we looking at when we do look at those indicators? Well, we're looking for one thing is the trend confirmation. I mentioned we could see that on a chart, but we'd like to have some kind of a confirmation that this is indeed the true trend. And when we kind of smooth out the price activity, that day-to-day gyrations of prices, and considering all the jabs and all the other noise that occurs in the market, you need to look at kind of that smooth indication, and that is a moving average, probably the most likely indicator that you can use to smooth it out, kind of to get an idea of what is really going on with that overall trend average and many confirmations. A lot of variations on the moving average, but it is the still most popular one to indicate a trend. Now, if there is a trend, of course, one of the other things you need to know, how strong is it? How weak is that trend? Is it gaining strength or weakening? Is it, kind of a situation where the change is not as fast as it once was, or is it gaining speed? That's the kind of thing you want to get out, and so you want to know what the trend strength or weakness, and that leads right into the momentum. Is that momentum gaining or losing ground? That momentum is an important term. It's kind of like looking at a chart and looking at it with an idea that when they get to a certain point, do they become overbought, oversold? And so you can look at a kind of an indicator to determine the momentum and kind of see what the sentiment of the traders really is. Well, the trader sentiment also can be reflected in some other ways. For example, if you look at when you try to determine the psychological state of the crowd and what they're thinking, you can look at the chart action itself when you see those kind of moves, and then you look at those parabolic moves like we've had in gold or silver or cotton. It seems like a lot of markets have had parabolic moves, and you know that those can't continue themselves very long. Then you get into those points in times where I mentioned the collapse in volatility, where you know it's not going to stay that narrow for a long time. And you can also get some clues by adding volume and open interest to a chart, indicators that you can add that will show you whether a big move came on heavy volume or light volume. If it's on heavy volume, that's pretty significant. Light volume, it means a different thing. So you want to look at that as possible clues. And here's an aside here. If you're looking at a market to trade, trying to determine it, not only do you have to look at the performance bond or the margin requirements, but the other thing you need to keep track of is the volume. Is there enough volume to provide you the liquidity that the market will require if you're going to get in and out easily? Now, after you have determined all that, what you need is all this information early. You don't want to be in a situation where you're the last to know. You kind of want to get an area of, kind of a point at which you can get into the market. And you want that to be early. You want to be ahead of the crowd. And then if you have some way of getting that indicator to give you some forecasting capability, that's even so much the better to indicate what direction it's going and what the next few days offer. And then, of course, you also need to have some kind of a action point. Where will you enter? Where will you exit? You can look at the chart, get the tone and the direction and all those kinds of things, but you have to know when is a good place to act without taking a lot of risk. Risk is very important to maintain your control of your risk. Now, what I'm going to show you today, trying to use the regular charts, pointing out some of the things on regular traditional charts and the indicators, is the vantage point charts. The vantage point charts are based upon inter-market analysis, which compares the various markets, 25 markets or so, that have the most influence on a target market. And then you try to work from there with some inter-market data, and it compares some moving averages, give you some indicators that shows you short-term market forecasts, not long-term, but short-term, get you positioned right and get you in the right direction depending upon the time frame that you want to use. I'm not a salesman or anything for Vantage Point. I just want to say that I am using those charts and their indicators to indicate to you some trading points where you might be able to get on board those markets when it's the most favorable time. Now we're going to look at a couple of different charts and talk about what we have here in terms of the chart. We're going to start with soybeans. Now, there's no particular reason for starting with soybeans because you could apply a lot of these ideas to any particular chart, but this one kind of, has been on the news lately. If you're an agricultural trader, you're well aware of things that are going on with the soybean market. This is a one-year look at the soybean market. I guess, other than the fact that the market went up, one of the most notable features on the chart over a long period of time is that we had kind of a range here that we established in the neighborhood of $14 or so. That kind of was a top side, and then if you look in the lower side here, we'll put a line here right below about $13, $12.90, $12.95, somewhere right in there. That performed kind of the lower end of the trading that we have been in for the better part of 2011. And you can see that within that we did have some various swings. Now we have a lot of space here, so you can see what's going on. So we're going to focus a little bit on the last 6 months where we have these ups and down movements, and you can see within those movements that we had a lot of situations where we had those what I call the run and rest type situations, where the market would surge. It would surge ahead here, and then it would get to a point in time where it would rest, and it would surge downward, up, those kinds of things. In between, the market tended to do a little what you might call a little resting, different kind of pauses that we had here. They're in different shapes and forms. You can see in here we had kind of a little situation on the bottom here. When it gets up here, we had a little situation here. You can kind of put little boxes around some of these. Some of these last longer than others. But in each case, you have a situation where the market makes a run, hits a spot where there will be something going on, and you'll notice that significantly a lot of these boxes occur that you see there right at the point in time where we were at that